World Bank cut their Russian growth forecast this morning as the demand for oil slows down around the world. What could that mean for the country, and where are the other investment opportunities besides the energy sector? Well, our next guest says investors should look at steel, fertilizer, and even the internet. Joining us now from Boston is John Connor. He's founder of the Third Millennium Russia Fund. John, welcome back to In Business. So World Bank says Russia's not going to grow as much as they initially expected. Are you changing your positions?
Well, you know, the market prices have been very low in Russia. The multiple for the market is about 6. But the economy is growing about 4%, and it's not 6%, but it's, you know, it looks 4% looks pretty good compared to the United States.
Well, where are you finding that kind of growth if it's not in the commodity stocks?
Well, the performances of some of the companies have been outstanding. The margins on the two leading Russian internet companies, Google, which is the Russian, Yandex, which is the Russian Google, and experts tell me some of their algorithms are actually superior. And Arkady Voloshin has done a great job building that company up. And then Mail.ru is the leading Russian internet company portal, and Dmitry Grishin's the CEO over there. And their first half performances this year, 2011, have been spectacular. But the stock, as I mentioned, you know, the investor interest in Russia is just not that strong. And as an overall market, it's depressed compared to Brazil, India, and of course China, the other BRIC countries.
And now Mail.ru, you were on the board there, weren't you?
Yeah, I was its first president. That's a long time ago. And of course, Yuri Milner and the other, people. Yuri went to Wharton, and they really built that company up, and they had a very successful IPO last year. Our IPO in 2001 got caught in something called the internet bubble, which burst at that time. Never happened. But some of the old standing commodities like fertilizer, potash, Uralkali, URKA is a spectacular company. And oil and gas, you know, the oil price has taken a hit, but there's still very good earnings on the part of the Russian oil companies. They export more oil than any other country in the world.
So you would still rather own a Rosneft over, say, an ExxonMobil right now?
Well, as I say, the multiples in Russia, I mean, the way to think of it, I think, is that if you want to own a steel company, and of course, flat steel is doing very well for the auto industry worldwide still, so that in Russia, that's Severstal and Novolipetsk and LMK. You would buy a steel company in Russia, and you get it for a multiple currently of way less than what you pay in the U.S., and the same with the oil and gas companies. So I think Russia's very depressed in terms of the overall market multiple. Why is that? It seems to be perennial a Russian discount, and there it is. I mean, I'm not sure that'll change, but it does give you the hope that if Russia begins to be seen as a more normal country, which I see it as, that other investors will get more interested in Russia.
All right. John Connor, always good talking to you. Thanks for joining us.